This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:17 p.m. on December 2nd, 2019. This is a quick update on market conditions for all our loyal members and free trial subscribers, so they're prepared for what might be coming their way in the coming days and this week in particular. Session will be recorded, uploaded to Google YouTube channel. Feel free to listen to it at your own time. And most importantly, spread the word. Anyone with the internet connection out there can access the Google YouTube channel and see some very powerful video casts on market forecasts, this being one of them. Full disclosure, this is purely for financial education, not for any solicitation or advice. So I believe what you're seeing behind you is a chart of the S&P 500, the overall market. And I want to go over a couple of quick things here, keep it real short, so you guys understand what happened today. Futures right now up about 3 points, means nothing. This is what we're looking for. I mentioned that a couple of times on my real-time Twitter feed at Clueless8RT, as you all know. And people who are going to be listening to this who are not members can feel free to subscribe and join us on our website, clueless8.com. Go on the top menu, subscribe, enroll, join as a gold member, and you're going to see the magic of tactical trading. So this is what we're looking at, guys, okay? Just want to keep you guys, I know you love hearing my stupid voice, but this is what I want to show. This line here is very important for a short-term support. It's a 20-day moving average on the daily, on the S&P 500. Not the E-minis, not anything, just the S&P 500, SPX, okay? So this line is an uptrending line. The 34-day moving average is also an uptrending line. The 50-day moving average also is rising or uptrending, all right? So what I'm looking at on the first hit is right here, 3107.25. We closed at 3113. 3107 is roughly about 6 points lower, 6 handles lower, right? On the S&P 500. Multiply that by roughly 8. So you're looking at another 50 points down on the Dow Jones Industrial Average to hit major support. If this support starts to buckle on a short-term basis, as a tactical trader who has been dead right on the market overall, I'm going to change my short-term bias to bearish if this breaks. Now, the markets are not there to do our bidding. We are there to read the messages that these charts are showing us and try to read the messages faster than anyone else. That's the game, just like any other business or any other sport. You got to be faster than the other guy or gal, right? So this is what we're looking at. If we break this, we're going to short because the market's going to come down towards 3071. If we break 3106, let's do the math quickly. 3106, and we drop, and there's a sharp move down, and all this will happen within 24 to 48 hours, if it breaks, whatever, or intraday, couple of hours, and we drop to 31 or to 3070. That's a drop of, just getting this right, okay, of 37 points from here to here. Change the color. From here to here, right there, the rising 34-day moving average. These lines have produced and made us a lot of money. So we have to respect it. We have to respect when they buckle. We have to respect when they hold. And we have to respect when they're rising. So 37 points to the 34-day moving average equals times 8, taking the higher range, roughly 296 points on the Dow Jones Industrial Average down. Let's call it 300 points. Okay, so that's another 300-point blow that is a possibility of happening. All right, just so you know. So what do we do in these circumstances? Do we keep on buying as the markets are falling? No. Today we bought slices, as we call scale in, of Apple, of Netflix. Tesla was doing great today, so no problem with that. We bought NetTeas. We bought the distressed value on TTD, Trade Desk, which has been a huge moneymaker for us. I didn't touch NVIDIA. I didn't touch AMD, even though I was looking at the charts. Bought a little bit of the Amazon, which made us 770% last week. I bought it around 7, and it's at 4.5. So I'm down on that. No big deal. Did I add more? Not yet. And then we had MYOV, which was doing fantastic. Calls were up more than 42% intraday. ALNY up for the day. Clovis, fantastic winner. Boeing smashed short term. Calls went from 5 and change down to about 2 and change. Bought a little bit more. Dollar cost averaging, as we call it. All right. So just giving you a small examples of what we did. Apple bought a little bit more. So 300 points on the Dow, we hit the 34-day moving average. Now, some of you might be scratching your head because you don't not following my Twitter feed, thinking, well, why the hell did the market go down? Well, the market actually went up and hit our level that we said it would hit in the morning, and then it turned. It was a bull. It was a bear ambush on the bulls. Okay? And I'm going to show you that. And you guys should know that by now because it's all there on the Twitter feed. So here was the level I said the market would go over. It did. On 12/2 at 3:45 a.m. in the morning, we hit 3157.81. When the markets opened at 9:30, we were right here. And then a huge sell program came in. We filled the gap. So this is what I want to cover before I go into the S&P again. So on the mini futures, what we basically did today, which is pretty much standard procedure, and remember one thing about life. When you're right 7 or 8 out of 10 times, or 70-80% hit ratio, you have the right to state your opinions. I do, because I've been right at least 70% of the time on the overall market direction. So, and I'm here to help you, not to say, oh, I'm right all the time. Just trying to help you guys, all right? So here's a big gap. Told you on last night's webinar, on the Sunday strategic webinar, which all of you should listen to, that we would, one way or the other this week, and it happened quicker. The faster it happens, it was one of my favorite terms. The faster the market drops, you're going to have an equal and opposite reaction. So the earlier it happens, the better it is. It happened on a Monday. Great. So you have the rest of the week to try to pick up something. And then I'm going to tell you the risk of why that might happen or might not happen. So right here is your gap. So what do we do all day long? We went above the gap, we stayed, and then we are in the gap. With futures up about $1 right now, we're still in the gap. So what's the short-term worst case scenario? We drop hard into 3,100. I did say on multiple webinars that there is a very good probability, and it's happening faster than I thought, which is good. This is the way I think. I'm not asking you guys to think like that, but I'm just explaining what my thought process is. That's why I'm doing this quick update webinar tonight. Is we went up to 3,160 almost, and now we will have to test the 3,100 level. So is it possible that somewhere along the line, maybe tomorrow morning, I don't know, that we drop another 17, 20 handles, another 160 points on the Dow? Yes, it's very possible. Just be ready for it. I've explained all that. This level is a critical level because, like I posted on my Instagram channel, which all of you should follow because there are some great highlights of powerful winners, because that's a promotional channel. So I'm not going to show losers, obviously. I'm going to show the big winners like Clovis and ALNY and stuff like that. Like I said, everybody, which includes the majority, who missed this fantastic ride that we caught a great portion of, okay, are now equally, if not doubly terrified of what happened. But why should you? You were not there. So you don't have enough positions out there to incur the intraday pain or negative P&L that us active traders are dealing with. Remember what I always say, the pain of sacrifice is far less, or I should say the pain of regret is far less than the pain of sacrifice. You think I make these things up? Look, I'm not a kid. I do this as a serious business. So what I'm sharing with you, I've been right most of the time. I've been wrong sometime. But obviously I've been more right than wrong. That's why I'm still here. All right? So enough of the philosophy stuff. The bottom line is this is the level that we still have a possibility of going down to, which is roughly about 14, 17, 18, let's call it 20 points. That's roughly another 160 points in the Dow before we have a sizable bounce. Look, what happened today? Well, it's Donald again, right? He comes out, but you have to read in between the lines. He wasn't very happy about what he said. It was Marco Rubio, little Marco from Florida, who pushed the hand of President Trump to sign the stupid Hong Kong bill, in my opinion. Because, honestly speaking, what the hell do we have to do with Hong Kong? We want to sign a good, feasible phase one deal with the Chinese. Do the Chinese go poke their nose every time we have a riot in Charleston? Right? In the South? Or we have a shooting, school shootings, or some kook is shooting out like 20 people in California in the mall? No. So why the heck are we poking our nose in the middle of what's happening in Hong Kong, which none of us really shouldn't even care about? It's a political move by Marco Rubio and the Democrats to push President Trump's hand to do that. And President Trump was very honest. He said it makes the deal complicated, more difficult. But the deal will get done, in my opinion. All right? I don't want to get into the politics of all that stuff. I know some of you understand it, some of you don't, but I really don't care. So the bottom line is we have 160 points, 200 points, 160 points lower, which can happen just out of pure force margin sellouts and pure panic. Pretty severe day today. This is your gap fill that I talked about last night that we would get filled, and boy, did it get filled. It got filled, and then it bounced. Double bottom? I think so. Who knows? And then maybe a little bit lower to 31.06. But this gap fill had to be filled, and it happened. So do you sell everything and just short the heck out of the market? I wouldn't yet. What I would do is reduce long positions, look for selective ideas which are going higher. Why the heck was Tesla higher so much today? Obviously because the shorts were covering. That's the simple reason. There will be a reflex bounce. And all these lines here are telling you where the markets can bounce to. In the meantime, how you manage your trades is your business. Let's take a look at this chart, which is very important to me. This is the one that I've showed quite a few times. I know some of you are clued into it. Here was the gap that I just showed you. These are Fibonacci retracements. And the 50% Fibonacci retracement is a lot lower. It's at 3,000. If we drop to 3,000, that's 700 to 800 points lower. In my opinion, that will only happen if we definitively walk away from signing the phase one deal. President Trump is overseas right now, and we'll be hearing a lot about tweets and stuff overnight. But his comments and the comments which I posted out there, breaking news from Secretary Wilbur Ross, Commerce Secretary, did not help the positive feelings about the market. There was nothing else wrong. You know what else was really positive that no one talks about in the fake financial media, in my opinion, is what happened to the 10-year government bond. Okay? The 10-year government bond, the TNX, actually the yields went higher. So what does that mean? By now, many of you should know that because I have talked about it in multiple videos. When the bond prices fall, yields rise. That means money's coming out of the bond market. Change this color. Off the fixed income market, which is a safe haven market, into the risk market. What is the risk market? The equity markets, the stocks, the stock market, right? So I'm going to put STK. So that's what happened. Bond yields were up 3.38% to 1.836%. This chart to me looks pretty goddamn positive. It tells me that the bond market wants to hit that 2% level. At that point, the stock market will have reached a significant top, and you want to be generally short the market at that point. We are not there yet. Okay, everything is displayed clearly. Move the decimal point 1 to the left, 2.153%, 1.907%, 2%, and that's exactly where we're going. So if money's coming out of the fixed income market, out of the safe haven market, where do you think it's going to go? To Mozambique? To Zambia? To Venezuela? No, it's going to get into the stock market. So that was a very positive sign today, despite what I talked about extensively in the Sunday strategic webinar, is we're going to get intraday volatility, and today was a prime example of that. So we still have about 200 points to go on the downside, which is going to hurt the options that we have, the call options. We did put out a hedge, and I told people to buy the SPY December 4th 310 puts. If some of you did it, great. Some of you didn't do it. That's not my problem. Told you guys to buy it around 50 cents. It's around 65 cents. That's more than 20% higher. Here is what we're looking at, to repeat. I don't want to keep on repeating the same thing, all right? Rising 20-day moving average, right there. That was an ascending triangle to start with that we broke out of, which majority were not there to enjoy the fruits of their labor or their sacrifice and make huge amounts of profits. Now we're coming down to retest it around 310, right there. Look at the number here. $310.58. So as an options trader, you have to know numbers, right? You have to know numbers. And 315.66, that's what we went to. 310.58. Where did we close at today? At 311.64. We are a smidgen very close to the 20-day moving average. If the 20-day moving average breaks, net, we got to go short. Now, the If you buy way too many puts and the market basically moves real fast, comes down, slips below the 20-day moving average, and then bounces up, you're going to be screwed big time. It's happened. It's happened to me a while ago, and so I don't go too nuts on a rising bull market, which does not. The trend in the bull market is very much intact as long as we stay above 304.57, and that's a lot way down. So my point is, I don't want to be too heavy short, because you wake up in the morning and you just basically you die. I mean, from a profit and loss statement. I told you guys before that the further you move away from the moving averages, the 34 and the 50, there is always a mean reversion. What's a mean reversion? You come back to the highways that you should be traveling in. These are the highways that we travel in. It is always above the highway or below the highway, the 34 and the 50-day moving average. We are now closing the gap between the high standard deviation, i.e. how fast and how quickly that we moved away from the highways. Now we're coming to basically close that gap. Most importantly, to keep it simple, and this is where I'm going to end the webinar, this update, is we break 310.34, we have to, in my opinion, depending on how fast you are, we got to short the market. But till that happens, the market is still going higher. Let's take a look at the weekly. The weekly chart is still intact. When we look at the stochastics, yes, they're buckling, but they are no crossover down. And this is one thing I realized on a short-term basis. This is why I think we could have a powerful reflex bounce. We hit numbers that every single time, I would say 95% of the time, and many of my members know that, we hit minus frigging 400 on the McClellan oscillator. Minus 400. You know what that means? That means that there was so much heavy duty one-day selling that it was literally throwing out the baby with the bathwater, which you never want to do, whether you have a baby or not, right? And here's the other part that I'm just seeing right now. We had a positive divergence. Look at the MACD histograms. They went actually higher as the MACD stochastics, percentage K and the percentage D, started to curl. We are due, in my opinion, with an 80% probability that we are due for a quick, sharp bounce within the next 24 to 48 hours. The last thing that we're going to see is the McClellan oscillator on my proprietary chart. So let me bring that out. And this is going to give me a reading of how oversold we are. Let's get it. This is the NIMO. All our previous older members know very well what we're looking at. This is serious stuff. Little drum roll. And we're going to put daily. And we're going to see. So ladies and gentlemen, we're at minus 31. The full stochastics are still pointing down. Maybe we go a little bit lower. But remember what I've always said. It doesn't matter what I say. It's what the markets have done. You get down to minus 50. You get down to minus 34. You get down to these type of levels. You have to buy the market blind. And it has worked 100% of the time. I cannot direct people on every 5 minutes what's going on. I can give you the reasons why it's going on. I can show you positive divergences. I can show you stocks that are up on a down day, where to dollar cost average, but I cannot manage your books. No, I don't do that. I don't change your diapers. I don't manage your money. So the bottom line is that we are getting to those levels where it's a very powerful, viable event. So tomorrow might be a down day, or it could be turned around Tuesday. But every single time we have come to these levels, forget minus 79. I mean, you could have made crap loads of money if you bought when the New York Stock Exchange McClellan oscillator was at minus 79. That was back in August. Minus 60, minus 65. These are extreme buy the heck out of the market levels. These are short-term buy the heck out of the market levels that we're reaching. That's all I got to say. DM me for quick questions. You want to really understand the dynamics, how we read the markets when we've been reading it very well. Then sign up for the advanced coaching sessions. Take the complimentary sessions if you're a new member or a free trial subscriber. I'm always here to help, but I cannot direct people in the middle of the day when they ask me, well, should I sell or should I buy? Look at all my stuff, try to get the messaging, try to learn, and I'm going to do my best. God bless you all. Thank you for giving me the opportunity to present this quick update to you guys tonight. Thank you. Don't forget, it is December. Santa is following real estate trading charts. He is. Good night.